I don't know if I'd say we ever fully felt like we made it because there's always more to do, but I'd say probably maybe making our first total million felt like a really magical moment where, you have something kind of people want. You started with one customer and you got 10, you got 100, and you got, 1,000, and you just keep growing and you're like, oh, wow, cumulatively we've done a million.
If you enjoy this podcast, don't forget to subscribe and follow it in your favorite podcasting app or YouTube. It's the best way to avoid missing future episodes, and it helps the podcast tremendously. Welcome to the Unlock Potential Podcast, and today we've got a hot topic. Prices are going up, customers don't want to pay more, and often workers don't want to work. So what can you do about that? Luckily, I got Henry, co-founder of Super.com, and he's going to talk about how he helped scale his company from zero to over $150 million in annual revenue. They have over 50 million users, and even the NBA great Steph Curry is an investor in his company. We dive into why is AI a game changer for every business from tech to restaurants, construction, manufacturing. And if you're trying to do more with less, keep your workforce happy, then this one's for you. Let's get started. All right, so today we have an amazing guest. We have Henry. And Henry, just for you, I'm wearing my Waterloo t-shirt,
Wow.
so as
Nice.
a fellow alum, it's great to connect. And Henry, why don't we say hi and just tell everyone a little bit about yourself?
Sure. Yeah. Thanks for having me. And great to be here. I guess you mentioned already, I went to Waterloo, studied computer science. Just always loved entrepreneurship, building products, talking to customers, shipping, iterating quickly. I worked at Google before. It was a great place, a lot of smart people, but just way too big, too much bureaucracy, red tape. Wanted to move faster, get stuff done. Quit my job exactly after 1 year. Started a company called Super.com 2016. So it's a consumer commerce fintech app, all-in-one app that helps people save and earn money across a variety of use cases. Been doing that company for the last 8 years. It's been a great journey, going from zero to over 50 million total users, 200 plus employees, over 150 million revenue a year profitable. So yeah, just a really great journey. And now I step back to the board. End of last year, my co-founder is running it day to day. And now I've been doing spent a lot of time helping founders, doing angel investing, researching AI, thinking what's next, and just there's so much going out there and sharing a lot of my learnings experiences on LinkedIn and Twitter.
That's quite the intro. So that's great. Actually, so I was telling Henry just the other day, I was driving to the city and I saw a billboard of Super.com. So I wanted to kind of share just some pictures of Super.com in the wild. So the first one I was going to share, and I think you'll like this. Let me pull it up here. So share screen. All right. So I stole this from your Twitter, but I saw the sign. So when I was driving in the city, at the one on the top left, and I was like, dang. And funny enough, I was on the way to the dinner to meet with you and fellow Waterloo alums, and like literally serendipitously, I saw this billboard. And I was like, this is awesome. It's like, hey, I'm on my way to see one of the co-founders of Super.com, and here it is out in the wild. Would love to get your take on how do you even buy a billboard? And I keep hearing from people, like, even though we're super high tech, a billboard means a lot. Like there's a lot of social validation, and so even for tech companies, it's a big deal. And so, yeah, we'd love to get your take on that.
Yeah, happy to share. So it was our first billboard I think we ever bought, and if you, I think if you read my post, you'll see the kind of the story behind it. But basically, we were this unknown brand. I mean, we were very well known with our customers. We have over 50 million users, but within the tech ecosystem, we were quite unknown. It's because our customers were not people like you and I, not people, kind of in Silicon Valley. They're people who are lower income, lower credit, and helping them save and earn money. Right. So our sort of target audience, we're not really tech people. So within the tech ecosystem, people a lot of times have never heard about us. So when you say Super, people thought we were like super.so, which is like a Notion website builder with like 10 people, right? So we're like, okay, I think we got to correct that a little bit. And obviously, spending time and awareness helps. But clearly there's something about buying a billboard that works. Otherwise, you wouldn't see people advertising on billboards, and certainly it wouldn't be that expensive, right? So I got a billboard. The process is pretty straightforward, but the interface is not great. Like there are some startups now, I think, doing some marketplace for digital billboards, but the old school traditional ones, like it's kind of like buying a house or a kind of a, we work with you can work with an agent, and they kind of show you different placements and signs, and you can look at them, or you can buy them online. But the interface is like kind of old, kind of janky, and it's not always up to date. But anyhow, so we bought this billboard. I think it costs about 20 grand a month per billboard. It was on the highway, but it was actually not the best location, because if you see here, it's on the left hand side. Right, so when you're driving on the right hand side, you're looking at the left hand side. It's a little bit distracting, versus on the right hand side, it's a lot more sort of easier. But anyways, this one was available. A lot of the good ones, the best ones, are booked up for like the whole year, so you couldn't even buy them if you wanted, because they've been booked up. Anyways, we got this one, and yeah, I would say the effect has been pretty. It's hard to exactly measure, because we weren't targeting users. We were targeting more like just brand awareness within the tech ecosystem, tech community. But I will say, I think you see this in post, right? Like after I put the billboard, like my banker texted me, twice within 24 hours, seeing both our billboards, and a lot of friends who reached out to me about the billboard. And also just generally, I think people now, I go to events, a lot more people seem to have heard about super.com from somewhere. Like you can't really quite recall where or what we do, but like it's like there's some familiarity. Again, not attributing all to the billboard, but I think it's just being more present, being more top of mind, being more aware. And let's see, anything else? Yeah, but it was great. I think it's cool. And then the best part is when then you make a post about your billboard, that gets a lot of attention. It kind of feeds itself.
Yeah, and then if you have friends visiting for dinner, they'll recognize you too. So it's great.
Yeah, that's right. That's
Yeah,
right.
I'm gonna share another picture. So let me pull this one up. This is a fun one. I was not expecting this. So I was out having a movie with my family, and then let's see if this works here. So we're watching Ninja 2, the movie, and right there I go, oh, super.com. Look at that. There's an offer right there. And so
Well, nice.
yeah. So I was like, hey, I know this guy. And so again, it was just like serendipitous. It's like, wow, now I don't know. I guess maybe the targeting is working. Like since I met you, I started noticing a lot of super.com placements.
There you
So
go.
yeah.
Maybe it's starting to connect, right? You got some.
Yeah.
This is much more of a performance placement.
Mhm.
That one's more of a brand placement.
Yeah.
But yeah, that's awesome. Thanks for sharing, and I appreciate the screenshot. By the way, great movie.
Yeah. Yeah, it is. It is totally. Yeah. Great movie. Definitely people should check it out. And so you mentioned some really impressive numbers. And so this is a fun game we're going to play. So you said 150 million ARR, right?
Yeah, like annual
Yeah.
revenue. Yeah.
Yeah. Total revenue. I don't know if you're allowed sharing that, but I'm assuming it's probably in the billions or
Oh,
yeah.
I don't actually know, because we've been growing so quickly, and I don't have the sort of summation math in my head of the growth rate summed over time. But I will say, in terms of total like purchases and sales and transactions, right, definitely well above billions now, because we do about a billion a year, right? So definitely quite a lot of just volume.
So let's try this. I'm going to ask ChatGPT a question. This will be fun. Let's see if this works. Hey, if I had 2 billion US dollar bills stacked, how high would it be?
Hey, if you had 2 billion $1 bills stacked, they'd reach incredible heights. A single dollar bill is about 0.0043 inches thick. So, multiplying that by 2 billion gives you a stack about 8,600 miles high.
Holy shit.
Wow.
All right, I'll stop there. Dude, that's legit, man. That's a lot of I had no idea how high that would be. But all right, so that's great. That's great. Yeah, so that's like this is a real company, right? At this point, in so when did you feel like, or was there a point where you feel like, hey, I think we made it? Like we actually made something real? And also would love to hear about times where I'm not so sure if this is gonna make it. Yeah.
Yeah, it's a good question. I mean, I think we've definitely been pretty fortunate in our journey just to continuously compound growth, and that's how you're able to get to that scale, right? Just keep compounding growth over time. Um, I don't know if I'd say we ever fully felt like we made it, because there's always more to do, but I'd say probably maybe making our first total million felt like a really magical moment, where you have something kind of people want. You started with one customer, and you got 10, you got 100, and you got 1,000, and you just keep growing, and you're like, oh wow, cumulatively we've done a million, right? And that was really, I always find the first million is like the most magical, or maybe the first sale is the most magical, one of the two. But now today we do like whatever over a million a year, and it's like not good enough. It's not, sorry, over a million a day. Sorry, right? Over a million a day is not good enough. That's only 365 million. So it's just kind of like the bar keeps getting higher. And I guess that's what keeps you to keep kind of pushing and growing, innovating. But yeah, that's probably I say yeah, probably around our first total million. And then in terms of when we think it's not going to work out, I think we've been pretty lucky. Maybe the biggest challenge or stress was around COVID. When COVID hit, we lost 80% of our revenue overnight. So we're like, oh shoot, we got to buckle up, rally through COVID. But I always felt like we had strong operating execution capabilities and we could kind of tighten up certain areas and really rally through COVID.
Yeah, yeah. What advice do you have for founders when they're like 80% drop over? That's a big deal, right? Like that's not something like, that's not like sneezing. That's like
Yeah.
peaking, right? That's like legit.
Yeah. I mean, it is, but I think, I don't know, my perspective was like, everyone's kind of being affected. And if we're going to, like, we are kind of just a boat in the ocean and we're going to rise and fall with the tide. So long as I'm not the worst one, then I'll be okay. Because we're going to figure out some way, right, collectively, whether it's economic policy or some sort of like, I don't know, just overall like collective action or something, that there's people doing much worse than me. So if they're going through it, then I'm going to survive. And you kind of just believe in your ability to execute, to be smart, make good decisions, be data driven, and just kind of figure it out, honestly.
I love that mindset because I think that's pretty critical. Right? Yeah, even though the chips are down, hey man, we got to win back, right? And the opportunity is still there.
Yeah. And I think we were also kind of fortunate because, COVID was it was there, but it quickly recovered especially for a lot of our core demographics and audience. So I think we were affected a lot, but we also recovered, I think, maybe a little quicker than the average.
Nice. Speaking of the name, I'm a huge Superman fan. And so when I first saw super.com, it was Sanchin who introduced me to that. I was like, I love the name. Like how did you get this domain name? And I looked it up. Like it's one of the most 20 most expensive domain purchases ever. Like it's definitely up there. And so, yeah, like how did you even how did you buy it? Did you go make an offer or did you like stealthily broker a deal? Yeah. What's this? Because that's a great domain name to get.
Thank you. So we were gonna do a rebrand after sort of our expansion to multiple use cases. And we spent a lot of time. We hired this expensive agency to do a whole brand exercise. And then at the end, we were kind of like, I don't know, none of the things they presented were that compelling. And we're just like, well, if we're gonna do a super app, why don't we just drop the app and call it super? I live super, have a great experience in life. And so I think that was our goal. Is just like, why not call it something big? And then my co-founder was like, well, we should get .com because super is a little generic, right? So we get .com. And I was actually okay with super.app because, I felt like in the mobile era, no one really looks at domains anyways. My co-founder felt pretty strongly about super.com. So we decided to do it. So yeah, we made a big purchase, got the domain. And the process with these domains, it's always kind of weird and kind of just, you hire a broker, you don't know who's buying, you don't know who's selling, and then they try to charge you based on your willingness to pay. So you're actually incentivized to not reveal too much information after that as well. And we had a whole process where we can buy this domain, but then it was used to belong to this gaming company, like a game production company. And then they had sold it actually. We're like, oh shoot, like did someone else buy it? And at the same time, Facebook launched a influencer app called Super. We're like, oh no, did Facebook buy it? But then Facebook turns out, like Facebook shut down Super, like their app, like they usually do. And like, oh, so Facebook didn't buy it. And anyway, so we ended up buying it from broker and bought it from some person in like Florida or something. I don't even know. Then, yeah, and then we had a domain, and now it's kind of potentially gone up in value because these things trade up and down. And as we build more brand awareness around it, it's kind of gone up in value, and we've gotten pretty surprisingly high offers. So in some sense, maybe we actually made money, or could have.
Well, hey, the super.com, they have billboards, right? Have you seen it?
It's true.
It's definitely worth something. Today's episode is brought to you by Tonda, the smarter way to retain and engage your skilled workforce. Here's the thing. High turnover, disengagement, and financial stress are costing businesses more than they realize. That's where Tonda comes in. Leading employers are already using Tonda's financial wellness benefits to boost retention, increase productivity, and keep their best employees longer. And here's why this matters. Tonda is already helping major companies across the US, and unlocked potential listeners have the exclusive opportunity to get in before the rush hits the open market. Be among the first to supercharge your workforce with Tonda. Learn more at tonda.io/Jesse. That's TANDA.io/Jesse. So, there's a lot, I read your posts a lot now, and so there's a lot of talk about AI, but would love to have you share with the audience what is AI. And we do focus founder and CEOs, but more primarily for a lot of blue collar employers. And so I think this would be a really interesting topic for them because in some ways AI could be their best friend or a scary enemy. And so yeah, we'd love for you to share kind of your learning so far. What's your take on it? And it's such a hot topic right now.
Yeah, it has lots. I was pretty heads down building consumer software for the last 8 years. So after I sort of stepped back to the board, I took my head out of the sand and just like, whoa, there's so much happening and it's all pretty noisy and a little bit scary. So over the Christmas break, I just spent, probably 2 to 4 weeks just really heads down studying all this stuff. And I have a CS background, so but I haven't, read a paper in a very, very long time. So it's kind of getting back into it, doing more research, reading papers, and kind of looking at the fundamentals, the first principles. It was scary at first, but also when you kind of realize that actually the whole field is not that old. And Transformers is 7 years old. ChatGPT is like barely 2-ish years old, right? And all this stuff has developed very quickly in the last couple of years. So it's like, and a lot of things that were state of the art before, like, doesn't really matter. Like recurrent neural networks, convolutional neural networks, burn all these things, right? LSTM. I was like kind of happy that I didn't have to learn it. You kind of just like toss it aside now, just start with Transformers and GPT architecture. So that was pretty interesting and relieving. And then when you go down to the fundamentals of it, it's actually not that bad. Like there's some core key concepts, a lot of matrix math, but that's pretty much it. And it's just a lot of data. And that's kind of the, bitter lesson, right? It's like as much as you want to custom build and tune this stuff, you always end up with better results in the long term if you just have more data at the problem and train it. So that's great. So I put together like a AI guide, which I can share if it's helpful. It's like kind of some of the best or top papers that are relevant for folks, and you can kind of quickly catch up into the public frontier of AI in like 2 week time.
Yeah, I'll drop a link below. Because I think the analogy I like to give is, like when you think about back in the day, you want to make a website, it was kind of a big deal, right? You kind of like, okay, I got the program, write HTML, serve it up. How am I gonna, host this thing online? And then if it's even older school, you have to colo it in some way, have it hosted. But now you have cloud, and now you even have like CMS systems, and now you have AI. So it's just got easier. And I think, and what I like about what you're writing about is, in the last like year, even 2 years, what you needed to know before about AI, you don't need to know now because inference is like just so easy to do now. You can kind of pop that in, and so the world has really changed. But one topic that I think you're really ahead of the game on is talking about really how do you grow a business really fast. And so I think you're kind of have a really interesting guide that you're publishing on companies that grow really fast in revenue and with not a lot of employees. And so like the revenue per employees is super low historically compared to SaaS, compared to more like older patterns. And so we'd love to have you share with people why you think that is and what's the secret sauce there, because it's very compelling.
Yeah, sure. Okay. So I built this I'll show you here again. I built this leaderboard that tracks sort of super lean AI native companies getting to, at least 5 million ARR with teams under 50. And you see there's so many companies, a lot of companies you probably know about, a lot of them I never even heard about, just kind of reaching out to me saying, hey, we should be on the list. So it's pretty incredible to see that rise and where you can go from launch to revenue very quickly. And I think there's a couple of reasons. So one is just there's a lot of common themes in the AI media space, like photo, video generation, which I think is pretty new. A lot of AI media companies, which I think is a new form or paradigm, which I think before we couldn't really do generative media. So a lot of people are pretty blown away. And, it was expensive to create videos, right? To edit videos, to do all that stuff. So that's, I think, one area. But the other two is I think it's just there's a lot of high willingness to pay because you can now be you can do more outcome-based pricing. You can charge based on outcomes like dollars earned or amount of time saved. And it's a lot easier to do that than to do like I don't know, charge $5 per seat per month, right? So it's a lot easier to get to 10 million ARR by aligning more the outcomes and new forms of sort of production like media than it is to do like a SaaS tool, B2B SaaS CRUD app for $5 a month. I think the combination of these factors, and then these are, pretty smart, pretty savvy founders who kind of realize, hey, you know what? It's actually better or more fun to own more of the company, be in control, have a lean team, and just be able to execute and control your own destiny, right? If you're profitable, making 10 million a year of 5 people, that's a pretty good spot to be. And you might, be doing better than most venture-backed hyperscale unicorn founders.
Yeah, yeah, and I think to your point, it's like it's almost like performance marketing, but not like company performance. So rather than just buying like installs or whatever thing you're going after, here is like you're literally buying like more customer interactions in a meaningful way, and so
Right.
that's super cool.
Yeah, I mean, I will say is some of the companies though, it is a little bit maybe it's a little bit juiced in the sense of when the AR is not necessarily truly revenue, because some of them are like token resellers, right? So if you're like a coding assistant, for example, right, you're kind of reselling tokens from Claude or OpenAI or whoever, right? So if you make, 100 million revenue, how much are you paying to Claude for the tokens and generations and stuff, right? So when you do the net of that, the margin profile is not that great. So there's a little bit of that too, but nonetheless, I think it's just what this is meant to capture is that people have a very high willingness to pay and very quickly for AI native companies.
So overall, what advice do you have for business owners? Let's say I'm I don't know, like a construction company or a factory or even a restaurant. There's just so much opportunity to kind of think about AI and how to deploy it. So any high level thoughts or suggestions of what you think that you know owners and operators can look at?
Yeah, I mean, I think one is just definitely embrace it because it's coming. It's here. The genie is out of the bottle, and it's going to really transform a lot of the ways we work and live. I think you'll see most of it on the white collar side, knowledge work side, but we'll probably start seeing it elsewhere later. But yeah, so I think just like kind of embracing it and playing with the tools, like as a consumer yourself, just using ChatGPT, using Perplexity, using these voice apps, these video apps, Midjourney, etc. So I'm just getting familiar. Once you're familiar, then you can develop understanding, and then you kind of figure out how to incorporate that in your business. And also just kind of also when you see something that's like inefficient or repetitive, right? Think about it as a way to automate that. Like, is there a way to do a simple automation, some workflow thing, some agent thing? And there's a lot of AI agencies too that can help. So, but I just probably really think about like how to automate and be more efficient.
Yeah, I love that because I think what you're saying is really sage advice because a lot of like I don't want to say mundane things, but even like making a menu for a restaurant is a lot of work to
Mhm.
jiggle. Oh, I want to move appetizers around. I want to do this, and so I think to your point, play around with it. Play around with one of the GPTs or whatever that could really just make life easier for you. And
Yeah,
that
yeah, you'd be really surprised like what these things can do. Like sometimes I even have to break the habit of, okay, instead of Googling this, I should just ask ChatGPT for the answer.
cool. On the flip side, as you're hyper scaling your company, when I think about super.com, I'm sure like you've had periods of growth, like both hiring a lot of people and also growing customers. So how did you manage that without diluting your talent and diluting like, your company, right? So as you grow from like you and a few people and become this like, larger entity, what was your experience on managing that and also maintaining velocity? Because oftentimes people are like, oh, we worked a lot faster when we were smaller. So as we got bigger, it seems like things get slower.
Yeah.
And so I know you know a lot about this, and so I'd love for you to share your wisdom in this area.
Yeah, well, I think it's somewhat inevitable where you hire more people. There's just more communication overhead, right? So you try to like, even as much as you reduce it, it's just exponential. So you're gonna be, yeah, a little slower. You're gonna get more done overall, but per unit of employee, it's just gonna be tougher and harder. And that's why you're seeing a lot of these lean teams emerge. But I'd say for us, like keeping the talent bar high, is it like kind of saying be slow to hire, quick to fire, right? I think we did an okay job at that. We're definitely slow to hire, but we were not fast to hire, though now we have a much more performance process with like a performance improvement plan, like twice a year performance reviews. in terms of keeping things, trying to keep the velocity high. I think it's trying to think. Yeah, I think it's just having a lot of structure and organizational execution structure. So we have an OKR framework process. We have a mission line team model where teams work cross functionally to kind of towards a common goal or mission. So you give them the autonomy and space to execute, but with the full resources of a cross functional team. So they don't need to wait on each other. They don't need to wait for dependencies. They can really control their own destinies. And let's see, what else do we do? Um, we Yeah, I think really open and transparent culture. So just keeping everything open channel, open Slack, public channels, and really like working on these with this type of like public build in public within the company to make sure everyone's on the same page, everyone's aware, everything, people can see all the documents and all sort of the information, and making that really accessible has been helpful as well.
Nice. And then how do you handle decision making process? Because I think this is where it gets interesting, right? So as you scale the team, you can have like mini sub teams that have domain ownership and expertise, but where do you draw the line, or how do they draw the line? So where major decisions get made. What's your philosophy in that area?
Yeah, so we use a decision-making framework. It's a DMF process where you have, it's actually adapted from Coinbase, but it's this whole framework where you can have inputs, decision makers, deciders, and you have a whole voting system where people can express their opinions and feedback and make sure I think the key part is that people just need to feel like they're heard, and then they can disagree and commit, right? So as long as people feel like they're heard, they're understood, it doesn't mean that it has to go their way, but they just have to, could disagree and commit. And that's what we found really powerful. It's just a framework where everyone gets a chance to voice and speak, have an opinion, regardless of rank or title or tenure. But people get to debate and have healthy debates. But ultimately, the decider decides, and the decision maker is the one that takes into account all of the inputs and feedback and makes the final decisions. Yeah, it's very powerful, and we found it really helpful.
Well, I'm going to change gears a little bit. Let's talk about you. So where's your hometown? Because I actually don't know. I'm kind of curious. I know you went to Waterloo.
Yeah.
So yeah, where did you grow up, and what was that like?
Yeah. I grew up mostly in Toronto, and then west side of Mississauga. It's like a suburb. Went to Waterloo, and now I've been living in SF for the last about 5, 6, 7 years. So yeah, it's been kind of all over the place, but it definitely, yeah.
Nice. And I know you do some angel investing and advising startups. So what's the most common question you get today? Let's compare notes. So I'm sure you get a lot of inbound. And so there's a lot of startup founders that would love to seek your advice. So what's the most common thing that they're asking you today?
Most common thing they're asking me, well, I mean, I'm sure you also get a lot of inbound, right? But probably still access to capital. I still think access to capital is hard, right? I mean, as I tell of two cities, if you're like ex OpenAI, Stanford, CS, sure, right? But if you're like everyone else, especially if you're not from a different background or a different sort of non-technical experience, it's really hard. So I still think access to capital is a big blocker to more founders, entrepreneurs, and there's people with like really good revenue, but it's like, oh, unfortunately, it's not a venture scale business. So it can be tough. Now, obviously, within the capital, there's a lot of other things they want to use money for, and there's a sort of advice there. But generally speaking, I think access to capital is still a big part of it. I mean, that's why people go fundraise, right?
Absolutely. And so if you were to classify the most common advice and things you give to them, what would that be?
Trying to think. Probably one is like just focus more on the customer. Do you really need this much funding, right? What do you need the funding for? Making them really think through their plan, their sort of use of funds, and like, can they own more of the company? Maybe, right? They don't need to dilute themselves that much. What's from a founder perspective, what's actually the best interest of them, right? Not just the investors. And then two is, I tell a lot of founders this, to avoid consumer travel, because we spend a lot of time in that space. A lot of people reach out to me about it, but I've been unfortunately pretty bearish, and you can kind of look at the markets, like it's hard to get funding. VCs don't like that space, and it's a kind of a duopoly structure. Yeah, just kind of being thoughtful about the industry, being thoughtful about go to market, being thoughtful about how you're going to acquire customers and scale. Probably those areas, as well as like being thoughtful about the use of funds and the fundraising process itself.
That's great. I worked at Expedia for almost 7 years as an engineer, so I love travel in general, the industry and everything. But yeah, it's a tough one. There's a lot of barriers to entry, but yeah, there's also some opportunity there too. So when you pick a company to work with, what's your criteria? Like what would entice you to say, oh, I'm actually willing to be an advisor, a helper, investor, whatever. But what is like your sweet spot, for a Venn diagram of the things that you like to be a part of?
Yeah. For me, I mean, I I help a lot of founders, but I haven't done like weekly committed like sort of formal advisory stuff. Just because for now I've been trying to talk to more founders, kind of trying to skill myself. But in terms of like angel investing, it's mostly on the team, like the people helping folks, like good people who you want to partner with or you want to back and support and you want to see them win and grow and succeed. So yeah, probably just spending a lot of time on with great people who are driven, passionate, who are in it for the right reasons, and helping them just grow and succeed.
I'll give the number two most popular question I get asked a lot, and I want to ask you this. If I wanted to get an intro to Henry, what's the best way? Like, so I'm sure like a lot of people busting through your door, right? And so you're getting a lot of inbound. And so what do you recommend is the most novel way to get an intro to yourself and others in general? What do you say?
I guess it depends on the person. Like I'm pretty open and accessible, especially now in during this time when I'm sort of like in between things. I'm sort of on board, so I don't have a strong. I mean, it's busy, but like I'm not in the company day to day. It's been okay. Like just generally try to go through my email messages, inboxes, and work on different types of founder reach outs. So right now it's been okay. In the future, maybe it's always nice to get a referral, get an introduction, right? So that's always helpful. I'm trying to think what else. Probably the other way, just like build cool stuff, like do cool things, right? Like talk about what you're building, build in public, and share interesting insights and perspectives. And a lot of people will reach out to you.
All right, great. Well, thank you so much for being a part of this. I'm sure it's going to help a lot of people. It's been fun. And yeah, I'll post a link to Henry's socials. And so if you guys want to get a hold of him, do follow him. He's got some great posts, great thoughts, and I'm a big fan. Thank you.
Thanks. Yeah, thanks for having me. And yeah, happy to be here.